What is up, Eagle Investors? Welcome to another episode of Eagle Investors Market Recap. And in this episode, I'll be going over what I've been seeing in the markets post-election, what potential changes we'll be seeing in specific policy and how that can impact specific commodities, as well as going over US job numbers, along with other themes that I've been seeing in the markets, such as the rotation out of growth to value and the resurgence of small caps compared to large caps as of recent. I'll be also exploring other themes as well throughout this. Today is November 21st, and the S&P 500 is up 9.4% year to date, and it's down 1.6% for the week. Now, something that we've been seeing more and more within the news frame is COVID infections. And we actually saw some weakness in the US dollar as COVID infections are continuing to ramp up within the United States. And we're seeing states introduce more and more restrictive measures. And on one side, there's a potential where we will see increased fiscal stimulus as a result to help support many of these businesses that are struggling due to the virus. But many people aren't expecting it until Joe Biden is officially in office. Another thing to keep in mind is the Senate is expected to be Republican, so it might be more difficult to make changes to policies, along with the fact that it might be more difficult to create a bill that reaches over $2 trillion as expected if there was a Democratic sweep. Now, with the rising COVID cases, there's also on the flip side, or for the midterm to longer term, we're seeing vaccines. Great news come out for vaccines. Earlier this week, we saw great results from Moderna as well as Pfizer, and there are the expectations that we could see some of these vaccines come out by December to the public. One thing to keep in mind with the Pfizer vaccine is there are still supply chain issues that they'll have to deal with, especially due to the fact that many of these vaccines have to be stored in a specific temperature to be passed out. On the Moderna side, you don't see that specific need, so there could be a rise in the prominence of the Moderna vaccine as you don't have the storage concerns. Now, when it comes to gold, we've been seeing some weakness within this for gold, as we've been seeing the election results have been nearly finalized, with Joe Biden expecting to win the presidency. And there's also been positive news on the front of the Pfizer and Moderna vaccines, which means there could be less volatility within the markets. So that has led to a downturn in gold, but we could see a further correction in gold as we see more news on the vaccines themselves. One thing to keep in mind is the fact that Secretary Mnuchin said that the Federal Reserve could potentially end their emergency lending programs, which means there might not be a specific backstop for many of these businesses if their lending facilities are gone and coronavirus cases continue to rise. So you could potentially see by the year after these lending programs are set to expire, and if there's no action taken, you could see gold rise, but in the short term, the outlook is bearish. Now, when it comes to US employment for non-farm payrolls, we're seeing a rise in the service sector in particular. We're seeing some jobs being added, but it's not at the same rate as before. We're seeing a deceleration within the growth of the US economy. So something to keep in mind, especially as coronavirus cases are expected to continue, how is that going to impact the services industry, and are we going to see a potential second wave of layoffs if some of these businesses have to go into the lockdown phase. Currently, many states are imposing more curfews, but if there are lockdowns and they are very widespread, what does that mean for the market? So that's something to definitely keep in mind as coronavirus cases rise, not only within the United States, but within Europe as well. And earlier, COVID cases were climbing in Europe. You would see specific lockdowns within, for example, Germany, within the United Kingdom, and within France. And if we see the same thing happen here in the United States, keep an eye on how the services industry will do. Now, one specific theme that I've been following is the fact that we've been seeing a rotation out of growth to value earlier this month. You can see within the October timeframe, you can see how IWM, which represents the small cap indices, the Russell 2000 itself, which represents small cap companies, has caught up to the S&P 500, which represents many of these large cap companies. And this rotation could potentially continue if we see investors continue to hope for one, fiscal stimulus. Another thing is monetary stimulus. So we're seeing within the European Central Bank the potential for increased monetary support as well as the decrease in yields. So that could mean that there are more support for many of these businesses within the value sphere. Also, with the news of vaccines coming out, you could see the Russell 2000 potentially increase in value with many of these value plays within the services space as well. And something to keep in mind is if we see coronavirus cases continue to grow, that could mean a potential downside risk for both the S&P 500 and the Russell 2000. Now, when it comes to crude oil, we did see a slight rise up as a result of the successful COVID vaccinations. So in the medium term to long term, the outlook for crude oil is pretty good because we can see an increase in demand and an increase in economic activity as the vaccines begin to be rolled out to the public. It will definitely take some time. Even if the vaccines are out in December, many people are saying that it would take until potentially up to Q2 of 2021, where we'll see a rise to the economic level that we've been seeing before the coronavirus. Now, another thing to keep in mind is with Joe Biden as president, there were some people who are potentially worried about a reduction in fracking. I personally don't think we'll see a large reduction in fracking, one due to the a divided Congress due to the Senate being Republican, and another fact being that a lot of jobs are within the manufacturing space and they, as well as the oil space, and they depend on the production of crude oil. And if many of these jobs are pushed towards renewable energies, you won't see the same amount of people within the factories and trying to work on some of these fracking rigs as well. So I think Joe Biden understands the importance it has to the U.S. economy and does not want to see a larger scale unemployment within the short term to medium term, as unemployment remains relatively inflated. Now, one theme that has been going through the markets is the rise in Bitcoin. Last month, PayPal approved the use of Bitcoin for many of their merchant payments, and you're seeing a rise in the use of Bitcoin within many other payment spheres as well. And you've seen a dramatic rise. Some people are saying that the rise in Bitcoin's the fact that it's considered a safe haven, quote unquote, but then you're seeing a disconnect in the price of gold as well. So gold hasn't been performing that well over the past couple of months, but Bitcoin itself has been rising significantly, and it's something to keep an eye out on. It seems like Bitcoin could be reaching key levels at this rate. If it breaks 20,000, it still seems to be something to watch for whether it can stay above that level or not, or we'll see a dramatic downturn like we did when it was at near its highs back in 2018. And if you're not part of the Discord server already, make sure to join. We have many trading alerts, as well as we go over the markets and are happy to answer any questions you might have. It's linked down below. And if you're not subscribed to the YouTube channel, make sure to subscribe and ring the bell to receive notifications for whenever we post any videos. And if you have any questions or suggestions, feel free to leave them in the comments below. Thank you so much and have a great Thanksgiving.